thanks for joining. It's quite exciting to be here, and we're excited that Experian and PayPlan are able to team up and come together to help answer a lot of the questions that you have about debt and credit reports. And we know there's a big overlap in some of the questions that you have. And so it's probably a good time to do a really quick intro and just say, we know there's a lot of concerns right now about debt and financial worry and how things will hit credit reports and credit scores and what does the future hold. And we've received a lot of questions about these topics, and this is why it's great for Experian and PayPlan to come together to hopefully give you some real practical advice and support if you are experiencing those difficulties. So I'm John, I'm from Experian, which is one of the UK's 3 main credit reference agencies, and most of you will know us as a credit reference agency that contains all the information on your credit report, and which is used amongst other things when you apply for credit, so things like your mortgage and credit card and bank account, for example. But it's also a great place using your credit report to do a financial assessment. So if you're worried financially about where you stand and what debts you have and how you've managed your payments, it's a good place to check and see how you're doing. And we'd probably encourage you to do that on an annual basis anyway, just to see where you are. And so it's a great time to then say that you can get your credit report for free from Experian and the other credit reference agencies, and it's what's called your statutory credit report. So it doesn't impact your credit score when you do check your score or report. So I'd encourage you to do that fairly regularly, but 2 times. One is for a regular financial check-in, and the other time before you apply for credit. So we're lucky to be joined by Ryan from PayPlan today, and I'll pass over to him, and he can tell you just a little bit about what PayPlan do and how they can help if you are having any issues.
Thanks, John. Thanks for the intro there. So yeah, I'm Ryan Horton. I work at PayPlan and I've been with PayPlan now for just over 12 years. The main thing about PayPlan and kind of what's kept me working there with them is the fact that we've been going for over 20 years now. There are no fees for our debt advice that we provide. We try and cover a holistic approach to the debt solutions that we look at for people. And in a similar regard to what John was saying about credit reports and that you can get those free, you can get debt advice free as well. And that's something that we pride ourselves on. So if there's anything that you're unsure or worried, or even if it's just general questions, and that's what we're here for, to help.
Great, thanks, Ryan. So we've received quite a few questions for today, and we'll jump right in. And hopefully, if you've asked the question, we can answer it for you. And if you find yourself in this scenario, you'll get a little bit of guidance about where to go and how things will affect you. So the first question is, my income has been impacted by coronavirus. What options do I have? So I'll kick this one off and really say that we obviously know that lots of people's incomes have been affected by the virus. Now that could be through being furloughed and having a reduction in your income, or redundancy, or just a reduction in the household income as well. Now, if you find yourself in that scenario, it may be the case that you might struggle to meet your normal monthly payments from that point, which then could lead to some late payments, missed payments going onto your credit report, which wouldn't be a good thing. But the good news is that lenders are offering support, and they call this forbearance, by the way, to help you in that scenario. So things like a payment holiday, maybe extending a credit limit or reducing the interest that you pay, maybe going interest only on certain things for a while. But the important thing is that if you find yourself in that scenario, the first option, I think, from a credit report point of view, and to make sure your score is protected as best it can be, is speak to the lender first and figure out the right option for you, the right support option. And doing those things will make sure that, if you take coronavirus support, as in a payment holiday, for example, your credit score is protected, which means you won't see a drop in your credit score for doing that. But I will say this, is that if you do take a payment freeze, a payment holiday, just remember that interest still accrues. So over the time you might take a payment holiday, you might see your overall debt increase, and then your monthly payments after you kick back into your normal repayment cycle, they've probably gone up slightly. So keep those things in mind if you're doing it. So Ryan, I guess from your perspective, you probably see quite a few people whose income has already been hit by coronavirus. I mean, how do you kind of guide them with what they do?
Yeah, and it's not just coronavirus. I just want to put that out there as well. It's really just a case of if you're worried about paying your bills or how any kind of reduction in income is going to affect your debt repayments, and that's the sort of thing that PayPlan look to help with. How it works is when you come through to us, or if you contact PayPlan, then one of our advisors will first start off by going through an income and expenditure form with you, so we can have a look and see what sort of money is left over at the end of each month. It might be that we can do one of our online benefit checkers as well, just making sure that you're getting everything that you're entitled to. And even if it is showing that there isn't any money at the moment to go back towards your debts, there are still options available for you. It might be that we look at a temporary repayment arrangement, and that's where you will pay a small fixed amount directly to your creditors, or it could be that we look at a flexible solution such as a debt management plan. And that basically means that should your situation improve, you can then increase your payments. The main thing to take from this is everybody's circumstances are different. So it's always best to get in contact with us so we can kind of look at it specifically for you.
Yeah, I really like that. I mean, I like highlighting that, let's make sure you're getting everything you're entitled to in terms of support. That's really good.
Yeah.
But one thing sprung out of me, there's obviously lots of different options, and you talk about income and expenditure and so on. Should anyone feel scared about doing that? I mean, it could sound a bit scary to some people, and maybe that holds them off getting debt advice, but is it a scary process to go through? I presume someone kind of holds your hand as you go through.
Well, that's it from start to finish. I fully appreciate that people are scared of debt and talking about it, but actually come through to us. You know what I mean? We've been going for over 20 years. We wouldn't be doing that if we haven't got a good reputation. Creditors know who we are. Citizens Advice, other companies will promote PayPlan, and that's because we're good at what we do. From the moment that you call us, or even if you don't want to call us, we can deal with you via email as well. So we've kind of got a little bit of approach to cover everybody. If you don't want to do it over the phone and you prefer to do it via email, that's something that we can do as well.
Great, super. Okay, so the next question that we've got is, I'm self-employed and my circumstances are very unstable. Should I wait to get debt advice? Ryan, I'll let you take this first, but perhaps maybe there's a message here about, should anyone wait to get debt advice or not?
That's it. Just jump straight in with that one. No, not at all. If you're unable to maintain your payments towards your debts, or you feel as though you're going to start struggling with payments, then that's the right time to seek debt advice. The more information that you know about the future changes, the better. But even if you haven't got a clue what the future holds, then that's not a problem. Still get in contact with us. One of our agents will still be able to have a look at what the best way forward is for you. With regards to the self-employed element, we at PayPlan have actually got a specialist self-employed team, and they understand cash flows, future projections. They deal with personal debts and business debts. And it's one of these things where people sometimes think, oh, I'll leave it and it will sort itself out. But if you do that, you've got to have the worry and the chance that you might get more regular contact from your creditors, which could cause more stress and worry about your situation. And we often find that a lot of our clients say that just by talking to us and getting an action plan in place gives them a huge sense of relief.
Yeah, I think that's a really good point. And I mean, at least to start using this time to think about and plan for what might happen.
Yeah.
You never know, I suppose, but I think from our side, we would say, actually, maybe it might be unstable at a certain point, but this is great time to do prep and plan and work out what payments are due and when. Make sure you know exactly where your finances are. Again, probably, check your credit report, see what you've got, what's outstanding.
Yeah.
And thinking about actually one missed payment could have a reasonable impact on your credit report. You could reduce your Experian score by up to 130 points, which out of 999 is quite a big chunk. So it's just keeping an eye on what happens.
Of course it is. I think it's a case of, well, just, do you know what I mean? It's never too early. If there is something in the back of your head that's concerning you, ask. It might not mean that you need to do anything there and then, but at least it's giving you that little bit of peace of mind.
Yeah, exactly. And not everyone is possibly in the same situation, but if you're fortunate enough, then actually trying to think about what you can do to prepare for the worst, which is maybe putting a little to one side.
Yeah.
Even working out, and probably with your help at PayPlan as well, actually how can you maybe pay off some of the outstanding debts that you have, so things aren't quite so tough if it does happen.
Yeah. No.
Okay, so the third question we've got here is, I'm finding it difficult to make ends meet at the moment. Should I borrow money to get me through this difficult time? Well, that's a really interesting one. Actually,
Yes, it's a good one.
Ryan first to tackle this one before I jump in, if that's okay.
Yeah, sure. Again, it's one of these ones where that sort of question does get asked a lot. If you've got debts, am I in a better position to take out further credit? But I think you've got to look at it and think, if you're finding it difficult to pay for your essential outgoings at the start, then we're going to strongly advise that you don't borrow any more money. If you haven't already, then the first thing you should do is ensure that you're claiming kind of what was mentioned before, claiming everything that you're entitled to in the way of government support. So speak to your lenders as well. It might be that they've got some options available to you as well. If you haven't yet taken a payment break for your unsecured debts or mortgage, then you can still do this up to the end of October. But as I say, similar to what John mentioned before, the consequences and being aware of how that's going to work and how that's going to impact you, you're still going to have to make those payments up. That's either going to be at the end of the payment holiday, or it might be that they add it to the term of your loan. But with regards to immediate relief, it could be a good option. Some banks out there as well are also offering a £500 interest-free overdraft. But again, if you are going to look at needing to borrow money, just think about it carefully. Avoid high interest loans from payday lenders, and instead look at local credit unions, or possibly even talk to people like friends and family. At least then interest rates are likely to be a lot lower.
Talk to mum and dad, right?
Yes.
I think actually, to reinforce your point, is certainly thinking about what you can afford to repay when you're looking to borrow. Now, actually, I think lots of people could find themselves in a situation where it could be financially prudent and better to borrow to consolidate existing high cost credit. Now, if that's the case, you may actually be able to reduce some of your monthly outgoings by, taking a loan, for example, to pay off a number of credit cards, or maybe loans, for example, that are much higher in interest. However, make sure you really carefully plan and prep how much you can afford to repay, whether or not you can actually get those credit agreements. So what I would say is that anyone thinking about doing that, make sure you're using comparison services. So, like Experian or the major comparison sites can do some wonderful things now where they can tell you how likely you are to be accepted for a certain product, like a loan, for example.
Yeah.
They can also tell you the rate you're going to get before you apply, which could be really useful. And it saves a lot of the guessing behind the scenes to say, I'm not sure what I'm going to get and what the rate's going to be until I formally apply for it. Because by using the comparison sites, it doesn't impact your credit score, which is great. You can do it as often as you want, see what you're eligible for, and even if just for a bit of research, it helps you along the way.
Yeah.
Excellent. So next question we've got is, will claiming universal credit affect my credit score? Well, quite a short answer, which is no. So claiming universal credit doesn't show on your credit report. In fact, your income doesn't show on your credit report. It's just your borrowing that shows on there. However, a bit like whether or not you might have had a reduction in income, this could lead to knock-on effects that might show on your credit report. So if you've been in work, for example, and now you're claiming universal credit,
Yeah.
might have seen a reduction in income that could lead to missing some of your regular monthly payments or not being able to meet the minimums. Now, if that's the case, we've kind of talked about it already, but what I would say is if you're in that position, you've seen your income reduced because you've moved to universal credit, speak to your lenders as soon as possible. And probably, Ryan, from your perspective, if someone's moved from an income or salary through work to universal credit, and they know they're not going to be earning the same amount and might struggle to meet their monthly payments, would you encourage them to seek debt advice at that point? Is that premature, or is that kind of a good time to actually do it?
Yeah, contact us. It's kind of like what you said. You've had a kind of how we look at it, like an income shock. Something's changed. Only you kind of know if you're going to be able to maintain your payments yourself. And that's again through going through your bank statements, knowing what bills you've got coming in, going out. But if you feel as though you are going to be struggling with your payments, and that's the perfect chance to get debt advice, and just make sure that it is free debt advice that you're getting.
Great, super. So I'll jump on to the next question, which of course I love to answer, which is, what are the easy things I can do to build up my credit score? So I don't want to dishearten anyone, because there's no easy way to do this. There are steps you can take, and it's not too difficult, but it takes a little bit of time. That's the important thing to think of. But I'll give you a few tips anyway. Now, the first is to make sure you're registered on the electoral roll. So really important whenever you're applying for credit to make sure you're on the electoral roll, and it gives your credit score a bit of a boost as well. Having a credit card is great. Now, if you don't have much borrowing history behind you or a good track record, you might be able to apply for a credit builder card. Now, they're usually quite high interest. So if you take one of these credit cards, you have to be sensible. Maybe use a small amount for the purchases which you would have made anyway. So, £30 of shopping, food shopping every month, and then repay it in full. And after 6 months to a year, that starts to really benefit your credit score as well. But a few of the things that you can do is also just starting to build that credit history. Now, this takes time because, you're not in a position to necessarily go out and get lots of accounts straight away, but starting to think about utility accounts, home utilities like gas and electric, getting those into your name, a mobile phone contract, these start building up a strong track record of credit. And importantly, is trying not to miss payments. So although you may struggle, and it's very difficult right now, speak to lenders before you get to the point where you miss payments. That's really important. And make sure you clearly set out with them, the right kind of plan for you for support. Excellent. So I'll jump on now to the next question, which is, this one's for you, Ryan. How do I qualify for free debt advice?
Simple answer to that one straight off is anyone can get free debt advice. There is no criteria for advice whatsoever. The differences that are going to be are the options that are available to each person, because they depend entirely on each individual circumstances. So at PayPlan ourselves, we explain all options that are available to clients once we've completed an income and expenditure form. We will check things like any assets, future plans, what sort of things are going to change. And basically the advice works around you. So we try and communicate with the client that's going to be right for them. As well as phone and emails, we now also offer services through WhatsApp. More recently, video chat. So with the lockdown and the pandemic, we've kind of come up with another way of communicating with clients, like we're on Zoom now at the moment. A lot of people are using that. So we've kind of brought that in as well. So it basically just means that you can see the person that you're talking to. You haven't got to use the video facility if you don't want to. But it also means that we can share documents live on screen. So bank statements with people. We can show people a budget that we've put together as well, and they can see it instantaneously, which is good. But the one thing that we do find is that people do wait. We've kind of mentioned this before. People do wait to seek advice, and they don't need to. Advisors at PayPlan, we're friendly. We're here to help, not to judge. And if you are struggling, then contact us as soon as possible.
Yeah, That's a really good point. I know we've picked up on that a couple of times, which is probably the waiting.
Yes.
But I guess we enter the realm of scary financial information and scary personal finances, which is, when people get into any difficulty, it's often quite easy to put your head in the sand and avoid it.
Of course it is. Yeah.
Best you can. And it's the same with credit reports as well. And I think, a couple of the things you mentioned actually, which should probably highlight is, which we often hear, and some of our surveys that we've done previously have shown this, which is a couple of things. People think it will damage your credit score if you check your credit report.
Okay.
Which it doesn't, of course. And we encourage you to do that as part of your checks. And, maybe if you're even going through the debt advice process, is checking your credit reports, making sure you know what you've got outstanding. But the second thing is also that that getting debt advice will somehow impact your credit score as well, which of course it doesn't. Ryan, you could probably kind of talk about this a little bit, but there might be certain debt solutions that you go through that might show on your credit report in certain circumstances, but actually the process of just getting debt advice, it doesn't show on your credit report, and it doesn't note there. And I think if anyone's in that situation where they are struggling, probably really important to do so, to just ask for that help, from providers like PayPlan immediately.
No, yeah, that's a good point. We get a lot of people who we talk to, and one of their biggest concerns is talking to us. Is that going to impact them? And just to try and put that kind of myth to bed, really, is that all the way through from talking to us right until we can give you debt options that are available to you, that can take 40 minutes to an hour, that whole process. But by the end of that, we can kind of say, right, these are the options that we think are going to be good for you. Try and tailor them specifically to each individual. We'll look at giving our recommendations on what we've learned from the client, but it's not going to impact them at that point. That's just finding out what it is that they can do, and then it's up to the client then on what they decide to go ahead with. But I think the main thing that people need to realize with the credit rating, say, stop me if I'm wrong, but the main way that you're not going to get defaults and issues with your credit rating is by meeting your contractual payments. And if you're not able to do that anymore, then, as I say, free debt advice is kind of the way forward.
Yeah, exactly. It's exactly right. That's great. So we'll jump on. We've got a couple of questions left. So the first one is, are there any top tips for getting out of debt? Now, Ryan, I'll probably let you take most of this. I think it's probably the area you can advise best on. But I guess, this question comes from a place where maybe you're already in a certain level of debt.
Yeah.
Perhaps there's either missed or late payments looming, or maybe you're already a certain way down that road. So then maybe what would you advise people to do in that scenario?
So there are probably 4 key things that we look at, and again, you can see this it is on our website. We have actually got a top tips for getting out of debt on the website, so that's payplan.com, and on there, step 1, kind of like what you was talking about earlier, John, knowing what debts it is that you've got, using somewhere like Experian, get your credit report, finding out who it is that you owe, how much it is that you owe, have you got any legal action against you, all things that you need to take into account when you're looking to try and reduce those debts or get on top of them. Step 2 would be to carefully check over your income and expenses. So taking the time to have a look through your budget, through your outgoings, your bank statements. I know it's not something that people tend to do or like to do. It's not always good news on there, but there might be things on there that you are paying out for that you thought you'd stopped months ago. There might be things on there that you didn't even know that you was paying out for. So it's all things like that that can impact your ability to repay your debt. When you do go through your expenses, just make sure that you're taking everything into account. So that'll be things like mortgage payment, your rent payment, council tax, utility bills, etc., food shopping, even small treats. People forget that when they come through to us. We try and say gifts. People will put money aside for gifts, hairdressing, haircuts, sandwich at the shop on your lunch. It's all those sort of things that do add up that you need to take into account. Step 3 would be looking at removing big debts first. So it's a good idea to tackle the big priority debts. So again, things like mortgage or rent arrears, utility bills, council tax, any legal debts. Removing these sort of things, I imagine you're going to improve your credit rating dramatically, and they're also going to improve your financial situation. Money that you get left over once that's been done, you may be able then to pay off your smaller debts, or if you haven't got smaller debts, that's money in theory then that you could put to one side and start to save and build up. And then the final one, step 4, is actually considering a debt plan. So even if you've done all of those mentioned that I've just been through that list there, and if you still feel that you can't get on top of your debts, then that's a good time again to get in contact with somebody like PayPlan, free debt advice, and we can have a look at all the options available to you.
Excellent. I think probably you picked up on a few points that we would generally advise people to do as well, which is, and we talked about this already, which is at least a financial assessment and understanding where you go, which is, for us, it's checking your credit report to see what's outstanding to your existing lenders. And, I think sometimes there's surprises on there that people don't know, that just like you've said, they closed or paid off, or it's already gone, and they get a little bit of a surprise on there. But then at least you know about it, and at least you can deal with it first. And I think then you take a rational approach as to what help you need, and I think that's where you step in as PayPlan to help guide on those issues of actually what's the right option for me to do. And making sure, I think, which you talked about as well, is making sure you set a strict budget as well, and knowing what's coming in, what's going out, and what you should pay off first. And I know you talk about priority debts there, but I think as well, you have to consider the cost of debt as well. So how much is certain debt? If you can start paying off existing borrowing, how much does that debt cost? So think about the interest rate and how long it might take you to pay off. So credit cards are a good example, with generally a fairly high interest rate. But if you're only paying the minimum, they can take many, 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 many years to pay off. So it's just giving some thought to how you do that. But, the primary thing is gather all the information first. And I mean, you at PayPlan can obviously help Ryan to as you've said, put together the budgets, put together the income and expenditure and so on, which I think probably is quite useful for a lot of people who find this a bit daunting as well. Yes,
definitely. Just going on to that, I know what you're saying about it being daunting and things. I just to try and put it across to people that if they don't want to talk to us on the phone, that's not an issue. But we kind of got, it's Monday to Friday, 8 a.m. till 8 p.m. Saturdays even from 9 a.m. till 3 p.m. And we've got the website as well where people can submit the details on there. So we try and cover all angles where possible to best help out the clients.
Yeah, great. And I'll say the same thing from an Experian perspective, which is, firstly, we've covered already, it doesn't impact your score if you check your credit report. So do so. I encourage it strongly to make sure that that if you're struggling, or at least you want to know where you are, you've checked your credit report and you know the situation, you know where you are financially at that point. And at least we can answer questions as well. So, although we see what's on your credit report, you can contact us and ask us questions about what's on there and what does it mean, and how does a late payment affect me, or a default affect me, and what can I do? And we can provide some guidance around that as well. So I'll jump on to probably what we'll take our last question now, which is, which we received earlier. Will getting a payment holiday affect my credit score? So no, it actually won't affect your credit score. So yes and no. So if it's a coronavirus payment freeze, now I'm using specific language here because between the credit reference agencies and lenders, we agreed something called the payment freeze while we're in this pandemic. And if you take that support, because your income is affected by the virus, then you won't be affected. Your credit score won't be affected. Now, it won't be noted on your credit report that you're in a payment holiday or a payment freeze, as we call it, and lenders won't know that information. However, there can be circumstances where you may enter into a payment holiday and it's not related to the virus, or it may be in 6 months from now and it may be unrelated to that. And in that case, it may affect it. So the lender may put a little flag on your credit report to say, I'm in a payment holiday, you're in a payment holiday. And that will be seen by lenders as well. The important thing is to know, I think, during this current crisis, that your credit scores are protected. But one thing to think about is if you're going for an application, and particularly a mortgage application, they may take a bit of a closer look at an application if you have had a payment freeze. So that may be the case that they'll ask you whether or not you've taken a payment freeze, or they may use open banking technology to see your income and outgoings, and it may flag on there as well. So it doesn't mean that necessarily that will cause an application to refuse, but it just means that they may take a bit of a closer look at the stability of your income, something to be kind of thoughtful of. Great, so that's the end of our questions. Ryan, I'll just put you on the spot and pass you over if you've got any closing remarks, your closing speech, or just add to that question if you've got anything to say before we kind of wrap up, and hopefully we've answered lots of people's questions.
Yes, no. As I say, thank you for everybody submitting through to us. It's been much appreciated. It's the first time I've ever kind of done anything like this, so it's been good, a bit of an eye opener, and I think that's been 2020 as a whole, really, hasn't it? It has been an eye opener this year, and hopefully through people talking, sessions like today, hopefully people have got that little bit more confidence, or that they're less scared that if they do need help, that they can come and ask for help. As I say, you've got yourself there, that you've been talking about Experian, and us here with PayPlan. So if there is anybody out there that's got any questions, worries or concerns, then use us. Yeah, really good final thought. I think the emphasis being, don't be scared. Don't be scared to check your finances, and don't be scared to deal with your finances, whether it's checking your credit report or whether it's seeking debt advice. Make sure you confront it, and then you can deal with it and get the right help that you need. And we've talked about, the fact you can get credit reports for free, you can get debt advice for free, even through PayPlan as well. So hopefully you've got some avenues, and we've answered some questions. So thanks very much. We've had some positive comments coming through as we've done the video. So it seems like we're answering some quite topical questions at the moment. Thanks everyone, and perhaps we'll see you again answering some more questions in the future. Perfect. Thank you.
Thanks, Ryan.